Welcome to Markets Now. I'm Michelle Rook with Randy Martinson Ag. Livestock futures initially opening lower this morning, but now all back in the green with the grain futures turning mixed here. We kind of opened with some weakness, but Randy, soybean market is already starting to come back here, and that market has really been like a beach ball, been pretty hard to get the market to stay down for very long here with the Brazilian weather situation the way it is, right?
That's right. And it's getting to be kind of critical for them. We're starting to finally see pictures out of some of the regions that are showing some of the soybeans. And yeah, they've had some pretty hot, dry conditions. And it looks like, for the rest of this week, it's going to continue to be that way. There's rain in the forecast for next week, but then, of course, the high pressure ridge is expected to come back in the 8 to 14. So right now, there's a lot of concerns about the northern regions, which are on the dry side, and the southern regions, which remain to be a little bit on the wet side.
Yeah. Now, if that rain does not confirm over the weekend, will we be able to take out the $14 mark in January beans finally? Or, is it possible we could take it out before then?
I think it's going to be tough to take it out before then. I think, with the rain in the forecast and the market's pushing like it has, I think we'll see a little bit of a consolidation here, for the short term. So I don't think we're going to take 14 out, but if those rains don't come in as expected or they're a little bit disappointing, I think we could easily cross over 14 next week.
Now, the products have also been helping out, taking their turns. We hit new contract highs in soybean meal here this week, I think even yesterday. And the soybean oil market has also been having a nice run here. And we're right up ahead of this NOPA crush, which is expected to be fairly bullish, isn't it?
It is. We're looking for another record number for the NOPA crush numbers, and I think they come out at 11 o'clock. So that'll certainly, I think that's helping to support the market. Meal certainly has been the bright spot, as that's been, like you said, hitting contract highs almost on a consistent basis. And so I think that with the products and with the concerns about South American production, that's really helping to support the soybean complex or vegetable oils for that matter.
Yeah, and I think palm oil was up like 2% here this morning, and that's made a nice run. So that's probably helping out that veg oil sector, to your point. We also have the meeting today between President Biden and President Xi of China. And so the market, even though we didn't see any more flash sales this morning, is still kind of working in the idea of better exports here too, isn't it?
Most definitely. I mean, we hear that China's short bought, especially for the December, January timeframe. That leads right into the U.S. being able to fill those needs as, we're wrapping up our harvest. And right now, with the trouble that South America's having, they're not going to have beans available until probably February with some of their delayed plantings. So it does open up the ability for us to have some, or at least in a little extended time frame for exports.
Now let's move over to the corn market, which is trading lower this morning, probably with wheat, or did we hit some areas of some profit of resistance and trigger some profit taking this morning?
I think it's tied a little bit more to wheat being down a little bit. I think if beans continue to go, it'll help the corn market. But corn is kind of waffling. I mean, we are looking at bigger production. It's a little bit negative numbers as far as the U.S. is concerned. We haven't seen the export demand, although we have had demand. It has not been as strong as what we've seen for the soybeans. But there's the hint that, if we continue to see the trouble with the soybeans in Brazil, that safrinha corn crop is also going to suffer. So I think corn is looking more at a later story than a story now.
But we have had some export sales to Mexico here on these flash reports this morning to Japan. And so are we at a price where we're stimulating enough demand that the export pace is picking up here?
Well, I think we are. I mean, we've hit in contract lows here in the corn market. Other than the rally this week, we were at contract lows just before that. So that I think that did stimulate a little bit of demand. And there's Mexico continues to need product. Surprised at Japan coming in and buying a good amount here this morning. But overall, we are one of the cheapest prices in the nation, in the world right now. Other than I think Argentina might be a little bit cheaper. But for the most part, we have the supply and we can get it out in time.
Yeah. We also have crude oil lower, the dollar index higher today. So that's probably weighing on both the corn and the wheat market.
Well, definitely on the corn market, that's tied to the energy side of things. And with so that's putting a little bit of pressure on it. Now there's talk of course, the energy department buying for the reserves. Maybe that'll help stabilize the energy market. But right now, crude has been a little bit more in a downtrend.
Yeah. But the higher dollar is factoring into the pressure in the wheat, though, right?
Oh, most definitely. I mean, we are still not competitive on the wheat market, as far as exports are concerned. Russia continues to command that. So we're still not being kind of considered. And with the higher dollar, that just makes it that much tougher.
Yeah. What about the Ukraine situation? We continue to hear some updates there, and they're still moving product, aren't they?
They are. They're running behind last year because of some of the issues, of course, with the corridor being shut down, but now with the humanitarian corridor opening up. But now overnight, it was announced that Ukraine and UK have formed together or got together, and they are giving some sort of a insurance discount to vessels coming through the Black Sea. So that might start getting some of the vessels moving back through that region again, which will help increase some of the grain movement.
Yeah. So I mentioned outside markets, crude oil lower, dollar higher. Yesterday, we were the reverse of that because of the CPI number coming in better than expected. This morning, though, we had PPI out, right?
We did, and they came out better than expected. So we are looking like we've got a handle, or at least right now, it does appear that we've got a handle on inflation. It is going down. Core numbers were down a little bit, but they're more than expected. So that's also leading to the idea that maybe the Fed is not going to look at increasing interest rates this year, that they'll leave things kind of static. And I think overall that's somewhat supportive, but it is causing the market to see a little bit of trouble there.
Yeah. And I know the cattle market's really been keying in on that macroeconomic news. It's funny, as you and I started to talk, we were back in the green in cattle. Now we're back lower again. So we've seen two-sided trade already. Probably not to be unexpected as we go into a cattle on feed report on Friday.
Well, exactly. We got stung by last month's cattle on feed report. This month's looks like it's going to be somewhat the same with high placements and, on feed numbers being, I think, at 102, placements at 106, and then marketing's at 98. That's the average estimates right now for the report. So everybody's looking at that bigger placement number, and that's what kind of shocked the market last month. And that would continue to shock the market, I think, this month.
Yeah, but we had a steep correction, $23 from high to low there in the February live cattle. So we're pretty oversold. If we get more recovery, how much do you think we'll get?
Yeah, you're right. It's been kind of brutal in the cattle markets. Like you said, 23 in the February, we're down 44 in the January feeder cattle market. I would expect that we could get somewhere in that. The last recovery was a little better in the live cattle than the feeder cattle. I'm looking if we can get a 20%, 25% recovery in this market. Hedgers should start looking at hedging their cattle at that point.
All right. And hogs have been two-sided already this morning. I guess we're in the middle of our trading range, our bigger trading range here, but that market continues to kind of chop sideways, doesn't it?
It does. And I think, right now, we've seen the hogs trade a little bit better when cattle were going down, hogs were going up. Right now, I think we're looking at more of a seasonal movement as supplies or demand starts to slow down a little bit. So I think this market is trying to find its way yet.
All right. Thanks for joining us, Randy Martinson with Martinson Ag. That is Markets Now.